Hey, good morning, everyone. It is Friday, December 26th. All the presents from Christmas have been opened, and we are heading toward the end of this year, 2025. We have 4 days of trading left today and then 3 days next week. I am joined by Daryl. How you doing this morning, Daryl?
Yeah, I'm doing great, Victor. It's good to be here. Hello, everyone.
Excellent. Yeah, we are kind of in a mild Santa Claus rally. We've had, I think, the 3 days this week that we did trade were all green. That's good. Today, we're looking at a flat open. We're about 30 minutes from the market opening. I can't point to any big news that's going on. I have been hearing kind of competing narratives on the economy. When I look at the economic data, it seems like the economic data is saying, "Hey, it's not a booming economy, but it's an economy that is expanding." And the unemployment reports, again, are like, "We don't have an unemployment problem." Now, you can always, you can point out maybe some rough spots on the economy and unemployment. But I've been hearing some stories that, hey, we may be in a recession because young professionals, people straight out of college, are having a hard time finding a job. And I'm like, huh, is that, does that have a lot of merit? So, what's your observation on the economy, how that's doing? And if you had to just take a wild guess at, is there a chance we're going to have a recession in 26 or 27?
I think the chance of a recession are not likely right now. I have a chart on the. Let me go to my bond charts and look at the 210 spread.
And once
Yeah,
you do
this.
that, you want to put
Yeah, let me
your
do that. I got out of
your screen
practice.
on the
You
stage.
betcha.
While you get that set up, Dividend Dad on X. I read you. Thanks for joining. Happy holidays. I haven't seen you post on the chat. It's very good to have you. It's cool
Yeah,
to see people on
I
X
work
come
with
in.
Dividend Dad a lot.
Yeah, that's cool.
Yeah, yeah. Okay. So the 210 the 210 spread on the treasuries is a pretty
Mhm.
good recession indicator. So back in the 90s we had a recession when it that spread got above 1.
And explain the spread, please. And the 210 means the Treasury 2-year term
Yep.
versus the 10-year. So those are
Yep.
the two there. But then
And I'm just
explain spread to
uh,
us.
yeah, I'm just subtracting the two. So what's the yield on the 10-year, subtract the yield on the 2-year.
And what that
And
signifies is the 2-year would be at a very low yield, and the 10-year would be at a much higher yield. And that's
yep.
what you're seeing this big difference, right?
Yep. I was just listening to Larry Williams this morning, who's I don't know how old he is, but he's been trading for a long time, since the 60s.
Hmm.
Very sharp guy, and he pointed this out this morning. So I already had this chart built, but I just added this one red line here because that's kind of when you get to a danger zone,
Hmm.
is when it breaks above 1 on that spread. So we had that in the .com era. We had that
Hmm.
in 2008, 2009, where it was much
Hmm.
higher. And we came way down in 22, 23. We've been creeping back up, and we're sitting about 0.67 right now.
Hmm.
And it's really when you get above 1 that things start getting a little questionable. So this is one.
And the definition would be the 2-year right now is, I don't know, 4, and then the 10-year would be at 5% yield. Is that
Yeah,
the
something,
measure?
yep.
Okay. So we're headed in that direction, but we're not quite there yet, right?
Yeah. And this is just one indicator that a lot of people use, but I thought this was interesting when I was listening to him this morning. He pointed this one out. So I just made one adjustment to my chart just to add that
Mhm.
red line because he said that's where things usually start getting a little questionable. But right now,
Yeah.
it's not indicating recessionary concerns at the moment.
What's interesting is, like, especially for the last 5 years, really the last 35 years that I've been paying attention, there's always, like, um, talking heads that are like, "Oh, this is why we're gonna have a massive, correction crash." And they're always putting their theory out there. Each year, they pretty much kind of just reset and kinda go, "Here's why the market's gonna crash." And they started 2025 along those lines. "Here's why the market's gonna crash." And then they stood up nice and tall when we had the big tariff sell-off. They're like, "See, told you guys." And then 2 months later, retail investors like you and I and most people that are on the stream bought into that crash, and boy, we made good money.
Yeah.
So it's not a matter. I like understanding the point of view and understanding. Okay, so like this is data driven here. Okay, I get this. Now, what does this mean? Kind of trying to make it kind of a explain it under terms that I think most people can understand. If the 2-year has a very low yield, that means a lot of investors are buying into short-term treasuries. They're like, "Hey, I don't want to be in stocks. I don't want to be in risk assets. I want to go to really safe assets." And they drive down the yield because there's more demand. It drives up the price. If you drive up the price on a bond, you drive down the yield. There's less money to be made. And that's a big, indicator that, hey, well, if they're not going to be putting money in stocks, that's going to take money away from the stock market and you're going to have a pullback. So, that said, it could also signal, trouble ahead for the economy. Now, big picture, the economy, okay, low interest rates help the economy. Um, I don't think tariffs are going to come back. What's your sense of tariffs? Could they make a comeback in 26?
You talking about inflation related
Tariffs.
to
You know
tariffs?
how tariffs were like a big, "Hey, we're gonna have 100% tariff on this country, and we're gonna have a 75 tariff on that country." And that really, I think that makes it really hard for businesses to do planning, and I would think that consumers are also like, "Uh-oh, my the price on my products and things I buy are gonna go up." So, do you think tariffs are gonna be kind of in the playbook for the government in 26?
I don't have that feeling that it's going to do that. I think we're kind of through the tariff turmoil. We may have a little bit of oscillation related to that, but I think the big thrust of tariffs is probably
Mhm.
completed at this point. Um, I'm not for sure about inflation, although I don't expect big inflation surges again. We could have some. Most of what I'm hearing is the first 6 months are going to be the uh, biggest point. First 6 months of next year are going to be the biggest points for uh, volatility. It,
Mhm.
it's going to be volatile the first 6 months. There's just a lot of things going on. It all depends on how those play out as to what actually happens with the stock market. But most people are the ones that I listen to anyway are expecting after we get past the first half of the year that things will possibly settle back down a little bit.
Okay. Well, that would be kind of like, if you were going to describe 2025, let's get in our time machine and go back 12 months. And you said that, it'd be like, yeah, it makes sense because we
Yep.
had two, at that point, we had two really good years. And it's like, you know what? I can't argue with that. We were sitting on really good gains, yada, yada. Now we're like, I can't argue with what you just said. We're sitting on three consecutive years. How often have we had a market go up three consecutive years? And geez, collectively, the S&P, how much is it up over 3 years?
I'll need to post Larry's video for you guys to
Okay.
watch because he actually pointed out one time in history where there were 9 years.
Really? When was
Yeah.
that?
It would have been back in the probably the early, it was either I think it was the 80s. We had 70s and 80s. There was a 9 year period where you had really good gains just year after year after year.
Hmm. And if you look at the S&P just over the last 3 years, compounded 80.55 performance. Okay. That's the S&P. That's 500 stocks. That's phenomenal. That should like the reason why we're getting so many retail investors participate is this is very hard to ignore
Yeah.
when you're sitting on, you know, retail investor, either the skill set's gone up, all those things are in the mix, but that's just phenomenal rate of return. So if somebody's looking to retire and they started investing 10 years ago, 20 years ago, 30 years ago, but they really got serious about it, uh, 5, 10 years ago, the last 3 years were like, yeah, I'm glad I got serious about my investing. I'm glad I started to really pay attention of, what stock should I be owning? And shazam, look at that return. Beautiful. So as we head into 26, this does have to be a point of consideration. Does it guarantee that we're going to have a down year in 26? Nope. It just means we have, in my opinion, some stocks are really expensive. Some stocks are moderately expensive. Some stocks are fairly priced. But I would say a greater percentage now are probably in the stock is expensive side of that kind of barometer. There's still some stocks that are discounted, but it's harder to find them. It was much easier to find them when you had a nice sell-off and correction back in 22. Boy, you could just look at technology. The S&P sold off by close to 20, it did sell off more than 25%. My charting here on Google isn't precise, but it sold off by like 25 point something. And back then you could find, man, Netflix, Meta, Google, I mean, just buy them all. You would have done great. So, your performance would have been far better than that 80%, by the way, because some of those stocks went up 300%, 400%. So, that's one of the factors as we go into 2026. I think economy, I don't think that's going to be a big mover, but we do have an expensive market. Got to be wise about, hey, do I want to jump into the AI trade? Well, jump in with both eyes open. Like, okay, it's expensive. Be careful because they may sell off. Speaking of which, I think the biggest story of 26 is going to be, is AI going to continue this, you know, uh, this valuation? Because our company is going to continue to invest in the big companies like Microsoft, Amazon, Meta, and Google. Are they going to continue to buy chips from Nvidia, Broadcom, and all these different data center uh, product companies? If they have any type of reluctance or, hey, we don't have to spend as much. We're going to slow down. I think we're going to see a pretty substantial sell-off in technology. And we'll see. It may be really volatile, like you were saying. You may see a big sell-off followed by a big rally. We shall see.
Yep.
All right, looks like Shadow Guy's on. Ha! Hopefully your Christmas dinner was really nice, Shadow Guy. Good to see you. And then Magical Self. So BRO. We can take a look at it. Is that Dutch Brothers? Is that Dutch Brothers Coffee? I think so.
It's Brown and Brown. Dutch Brothers is Bros, I think.
Oh, okay. Got my bros wrong. All right, cool. So, all right. So I don't have a heat map yet. So we can take a look at, we're going to look at Magical Cell's comment real quick. Yeah. Do you have any opinion on 493? Well, I think that's where you can find, I think some value is maybe going into some pockets that are going to do well. And, there's three sectors that I would say are worth considering. Industrials, where it's not necessarily with industrials that are in that data center, because I think those are really, really expensive. But some industrials that should have a rotation into them, both from the economy perspective, like, hey, those are cyclicals, or they should do well in 26. And then the other sector is materials. Materials have been performing really well in 25. I think they can continue into 26. And then consumer discretionary, low interest rates. The retail reports that I'm seeing is retail is fine right now. They're doing fine. Can you pick out some rough spots, some kind of negative news in it? Yeah. Every store you can do that. But I think if you look at the data, it's like, yeah, they're growing and retailers are going to do fine. So finding some consumer discretionary stocks that maybe had been sold off might be a good idea. All right. The chat comments coming in fast. So we're going to look at Brown and Brown to kind of get started. We'll let the market open up. So Ben 10, good to see you. We're going to look at PANW, and that's Palo Alto Networks, right? All right, before I jump in, I did want to go into the contest for the channel. So this is just for fun, picking a stock you think is going to do the best in 2026 from a percentage gain. So on January 1st, I'm going to lock in the prices, and then we're just going to, track this at the end of each month. I'll just see which stock is performing best to worst, and it'll be fun just to see, hey, which stock ended up going up really well, which stock lagged, and so forth. And we'll see. Maybe at the end of the first quarter, we can kind of say, hey, these stocks are kind of leading the field after 3 months. And at the end of each quarter, it'll be interesting to see how these stocks perform. We're looking at, some usual names like Amazon, Alibaba's in there, Clover, got some small caps in here. What's ALM? ALM, I can't remember that. And then we got Catalyst Pharma, Dave, which is a small financial company. And this is Delcath. This is a healthcare biotech company. And we've got Fubo. Mike's been killing it on Fubo. He plans to kill it again on 2026. Gambling.com. Now there's a small cap that can really go places. I'm willing to bet that one of these stocks is going to be acquired, and whoever picked the stock that has an acquisition involved or gets acquired is probably going to do well. Hive, this is a pretty good pick. Some of these picks, right? You're either going to come in first place or last place, but that's what you ought to be doing, right? Aim for the fences. And then MicroStrategy or strategy, that's not a bad idea. Now, if MicroStrategy is the best stock out there, we're probably going to have an awesome stock market, right? Because that means risk is on. We're like, let's just go for it. If Nebius, Juicy went with Nebius, he already owns Nebius, if I recall correctly. He's done great with it. It's up more than 200% in 25. Can it continue to go up? Well, that data center spend continues to go higher. Most definitely can. And then OKE, I don't remember what that is.
They're midstream.
Midstream energy.
Natural gas.
Oh, man. This live stream duo is in energy, by the way.
Yeah, I saw that. I saw that yesterday.
Now, Oxy is another stock that could be either I'm going to come near the top or come near the bottom. I'm not going to be in the middle because either if oil prices go up, Oxy's going to do great. Oil prices do nothing, I'm going to be bottom feeding. It's just going to be at the bottom. Oscar is a pretty interesting pick. Again, I think Oscar is going to do great in 26, by the way. I think the whole healthcare area, for their type of healthcare, for their type of growth, they're going to do great. Oust, see how they do. SE could do great. This is C Limited. SoFi could do great again. And this one here, this one could be in first place if we're seeing the software space. So Zeta is like a small version of Salesforce, and if Salesforce catches a bid, and let's say Salesforce is up 25% in 2026, Zeta is going to be up 50, not 75%, because they're small. They'll catch a bid because they're growing, really profitable. So that's a good pick. So if you are on this stream and you haven't got me a stock symbol already, do that before the stroke of midnight on December 31st, 2025. I'll put you on the board. You'll be a part of the contest here. And we'll track it at the end of each month and then at the end of each quarter and see how these stocks are doing. So thanks for everybody who's sent me their stock symbol. Good luck to everybody. It'll be fun. All right. So we are going to go into Brown and Brown. Brown and Brown markets and sells insurance products. You know, we've been getting a lot of insurance requests on the streams. People are thinking insurance. And these guys sell services in the United States, Canada, Ireland, UK. It operates through 4 segments: retail, programs, wholesale, brokerage, and services. Let's take a peek at their website. All right. So property and casualty, personal insurance, employee benefits. So I haven't heard of this company. Have you heard of this company? Are you familiar with like like we have Progressive, Allstate, Geico. Those are big brands. I've never heard of Brown and Brown.
We've looked at it once before, but it's not one that I'm intimately familiar with at all.
Okay. All right. So that's what they're about. So the stock over the 1 year has been under pressure. Year to date, same thing. The 5 year, they were really flourishing. And you know what's interesting? I guess they did have that pullback that Allstate had the pullback first, and then Progressive started their pullback more recently. and these guys performed really well. They went from $53 up to 120, and they're back down to 80. Okay. Forward P is 17.7. Looking at their history, they've been growing, good rate of growth. Their total revenue, they're probably 5 billion at this point. 5.3 billion, growing at 17.5% if we look at the trailing 12 months. It's very good growth. So they have very good free cash flow, and they're growing it. So their forecast, we've got 14 analysts covering it. 22.67 is the average of the discount that all these price targets amount to. And it looks like in 26, they're going to grow revenues really well. I don't know that they're hitting 27% this year, but this is really good growth next year. And then the earnings per share looks good. So that looks good. Now it's interesting, in California we had these storms go through, and the forecasters, right? They just got it wrong. They were like, "Oh man, this is going to be a atmospheric river. It's going to cause a lot of flooding. Insurance companies are probably really nervous." And it ended up being like a decent storm, but nothing crazy. Like, I was in Texas this past summer, and I had to drive. Well, I didn't have to, but I wanted to drive from San Antonio to Houston. We went through some rainfall that was like, holy smokes. I think maybe next time I'm gonna take a submarine. It was pouring rain, lightning storms that were like awesome. Like, geez, incredible. And that was a storm. In California, we get, our storms are nothing compared to that.
Yeah, they even had a strange name for it, a bomb cyclone.
Really?
That sounded pretty scary to me, and I thought, wow.
So the whole California storm, rainstorms, ended up being a big thud. Like, yeah, it wasn't all that bad. So insurance companies are just going to be fine. This thing's trading up in the, well, I don't think, is that a pre-market number? No, we're not seeing a pre-market number yet. All right. So the way that I value insurance companies is, and I wonder if I have Brown and Brown. Yeah, there we go. So we looked at these guys just recently. Now my valuation is saying that they're a little expensive. Okay. So they are a little expensive. Let me double check if I've got all the most recent information on these guys. And around insurance, you have really good choices. You got really well-known names, and you got some smaller names that could really do well. Let me just double check and make sure I've got all the latest and greatest data. That looks right. And let me check my earnings per share number. Well, slight revision. Got to bring this down by a penny. So, it's there's no wild discount there. And within insurance, you got like Old Republic discounted at 15%, Progressive discounted at 23%. This is like a really well-known name. And I've got them at an 8% discount because in a really good company, I'd put at 7.5 because they've had their troubles. They're trying to get their pricing right on insurance. So that looks like a pretty good deal. And then you got new school kind of companies trying to make a lot of noise. Root is more of like, think of them like a Robinhood or a SoFi, kind of like trying to disrupt the old guard with selling insurance on the internet, kind of under the way that consumers buy stuff now, as opposed to insurance companies are a little bit slow on adopting common themes. Palomar looks really good. So you got some really good stocks out there in insurance. Now let's take a look at, there's a table I put out here. Here it is. Here's Brown and Brown. So when I compare Brown and Brown, this is the market of stocks in insurance. We got Allstate. Forgot what this one is. Palomar, Fairfield, Old Republic, Progressive, Chubb, Root. Then we got Brown and Brown. PE ratio, they are not leading the field. They're the second most expensive PE ratio on this list. Return on equity, you want this number to be as high as possible. Progressive's number one. These guys are kind of lagging. Price to book, we want this to be as low as possible. 2.2, it's right in the middle because you have Chubb looks better. Old Republic looks better. Fairfield looks really good. ACGL looks good. So I don't know where to rank these guys, but they wouldn't be near the top. They'd probably be in 6th, 7th place. It's just not one that I would put near the top of the stack of insurance stocks that are available. I think insurance is going to be good for 2025. These guys are smart. They're always making money, which is why Warren Buffett probably buys into insurance. He likes the odds. He likes, hey, you sell a policy. Somebody says, yeah, insure my car, please. And I'm going to keep it simple. All right, $1,000. And that policy owner pays you $1,000. And, a bunch of other people do as well. You get all this cash. You get to invest it, do stuff with it. And then you have actuarians that are really good with math, and they're able to model it out and say, we're going to collect on average a certain amount. We're going to pay out like 90% of it. So we're going to have a nice profit, and we get to work with the money in the meantime. So it's just a really good business. So that's what I'm thinking. Brown and Brown would not make it into my portfolio because I think there's some better stocks out there that I'd rather invest in. But let me turn it over to Daryl. Take a look at the technicals on Brown and Brown.
Okay, so they're in a confirmed downtrend. The 200-day is declining. We have a downtrend drawn from the point they reached the 2nd of April of this year. And they've come back and tried to test that basically through June and the first part of July. Trailed it pretty much, come back and tested it once more. And they're trading below that downtrend line at the moment. I have a support level drawn at 75, so they're trading above that. They do need to break above and maintain above the 50-day would be the first thing I would start looking at. And the next point of resistance would be this downtrend line. And then I have one other point of resistance at this gap here. So 97 is pretty doggone close to the 200-day at the moment. And this one gave us a warning sign back in March and April.
Mm-hmm.
Remember these negative bearish divergences that I've mentioned several times? So here we had a run up in price with a pretty good RSI level. We pulled back and ran up real hard to 125 on much less RSI or much less momentum. So I drew that red line across there. As soon as it started breaking down, that would have, especially when it goes from overbought to almost oversold in less than a week, that would have been a time maybe to really start thinking getting out of this one or reducing the holding, because it has not even begun to try to recover from that point since. Now, sometimes you'll get one of those divergences on the RSI and not the PPO or vice versa. We had it on both. So this was like somebody telling you this is going to break down, and it certainly did. Since we broke down and got into negative territory on the PPO, it has really not been above zero for more than a week or so. And also, since we broke down, we have not managed to get above an RSI of about 58. Um, and that's only been twice, and it was rejected at that. That's why I have those red lines there to keep my eye focused on 60 and 40. So it couldn't even get to the 60 line and immediately reversed. You can kind of tell when people stop accumulating it. Most of them were getting out about right here, it looks like, because since that point, the accumulation has been predominantly in distribution. We can see that money flow has gone negative and stayed negative. So most people were getting out about right here, it looks like to me. So this one's got a lot of work to do. It's in a confirmed downtrend and hasn't even tried to break above that trend line, that bottom trend line yet.
Thanks, Daryl. All right. So the market is open. It's been open for 6 minutes, and it looks like NVIDIA. Man, look at NVIDIA go. Up 1.7%. And I wanted to insurance. Here it is. So this is the insurance industry. Progressive's up a little bit, Chubb's up a little bit. And those are the ones that I could tell. Overall, market's mixed, right? We got industrials under pressure. Might be interesting to look at a couple industrials on this stream. And consumer staples, a couple of them are going up higher. Energy's up a little bit. Materials are up. Of course, the gold miners are up because gold prices are up. And it looks like copper's up. And I don't know what this is. See here. Yeah, copper. Man, Southern Copper. I've seen that stock for years now, and I didn't get in it. It just, and it's one of those, I wish I would have bought it. And then I think, Mike, I think you asked about Verizon. It's catching a little bit of a bid. I think Verizon is a pretty good idea right now. I also think Comcast is a good idea within telecom. And telecom, I don't know that Comcast belongs in telecom. I think they're more of a diversified communication services company. They do broadband, but they also have a studio. They do media. They would like to have a streaming business, but I don't know that their Peacock service is all that successful. So it looks like tech is leading the way. NVIDIA leading the way. We are seeing some signs of life down here in software. That looks good. All right. Speaking of technology, somebody asked about Palo Alto. And Palo Alto has not had a good year. And Palo Alto is a stock that I've covered multiple times over the last 5 years. And I did cite that I didn't see Palo Alto as being a fantastic opportunity. I thought it was too expensive. And that research ended up being correct in some ways. And we'll take a look at the valuation I have on it today. Let's see if maybe the pricing's gotten better. This is a company that started in networking, but now they do a lot of software and a lot of security software, which is a good idea. But they are a networking company. They're like a smaller Cisco. So, and who did a deal with Google? Was it Palo Alto last week? And they're just going to do more with Google. Was it Palo Alto or some other cybersecurity company? So these guys, they have Security, operations, okay. Solutions. Here's our customers. All right. So that's their business real quick. It's a $130 billion market cap company with revenues of 9.5 billion. The forward PE is expensive at 47. Looking at their growth is good. It's not fantastic, but it's good. 15% on a number that's 9.5 billion is good. And their gross profit. See, this is why, like, they want to showcase that, hey, we're a security company, we're a software company, because those margins are real big on that side of the business. But when they sell a product like a router or something that requires that they make a product that requires materials, labor, all that good stuff, it brings down your margins. So Palo Alto is not a very, and actually I stand corrected, 73% gross margins is very good. So what am I not seeing correctly here? So we got 9 billion. Yeah. It's early in the day. I need another cup of coffee. 73% gross margins is fine. Free cash flow looks really good. 38%. So that's looking good. So that looks good. Margins look good. Looking at their forecast, we've got 38 analysts covering it, plenty of attention. And looking at their forecast, they're going to keep growing. No big surprise. It's not like everybody's like, hey, we're going to spend less on technology. No, we got to make ourselves better online. We got to connect better, have higher speeds and so forth, have better security. So the growth looks good. Again, it's not like fantastic, like 30% growth, but it's good. And the rate of profit expansion is also good. But this PE ratio, it just seems expensive for a company that's growing, in the low teens. And I'm not going to change that kind of observation, because you can find other businesses, even in their space, that are growing actually better, that have better PE ratios. So it's like, okay, well, we buy in a market of stocks. We don't have to buy one stock because it's a rule. No, we buy the one that's going to make us the most money. So why don't I turn it over to you? I'll update my valuation, make sure I've got all my T's crossed, I's dotted, and then we'll come back to my screen.
Okay, it's been at least 2 months since we've looked at this one, 2 or 3 months. But the last time we looked at it, we saw this cup with handle pattern. And once that occurs, you can go to the right rim of that cup. Price was 207 something, subtract the low, 165, and then add the difference back to the price at the rim of the cup, and that gave us a price target of 251. This one tried, it made it up about halfway. Got up to 263 and then failed. In my experience, the vast majority of these kind of patterns do eventually end up hitting their target, but you will have some that fail to do that, and this was one that did. Once again, I'm noticing a bearish negative divergence. So on these last 3 drives higher, we managed to get an RSI that was fairly high. We pulled back and drove the price higher, but the RSI was lower. Pulled back once more, drove to even a higher price, but the RSI was lower, and then it broke down after that. So it came down and tested the 21-day moving average, and when it broke down below it, that would have been the time to do some trimming. The 200-day has been pretty flat. It was increasing declined for just a little bit and is increasing a bit more. And it looks like the last 2 or 3 days, the 200-day is moving back up. But you still have a 50-day and a 21-day that are pushing to the downside. We did have a lot of volume on Friday, and the trading this week has been very light volume. So we have some sideways trading based on that. The money flow is negative at the moment. They haven't had peak accumulation since July. It's been basically trading sideways since probably the second week of August. The RSI is at 40 line right now. It did get below 40 right here. Like to see this one break out above the 50 line, and the PPO starting to make a little bit bigger move. It's just trading sideways, but this week and next week, because of the light trading, we might not see much in this one. After the first of the year, we might see a little different characterization of the chart.
All right. So I updated my research on Palo Alto, and it's a fairly priced stock. Cash flows are good. I think cash flow I actually get a discount of 17%, but that high PE is kind of hung up on that. I'm gonna give them a PE at 25, and actually the PE ratio, the average PE ratio, has come down on the S&P. But these guys are growing well. But it's not like, wow, man, they're growing by leaps and bounds, 50%. Nope, they're not growing that fast. So I can't give them a super high PE, and that's where I'm kind of bringing down the valuation. I think it's fairly priced. I'm also aware that, hey, this is Palo Alto. It's fairly priced, but let's take a look at some of their peers in the market. Okta. I like Okta. They had really good earnings, discounted by 46%. Now, Okta is more single sign on, smaller, one trick pony, smaller cap. But hey, 46%. I'm not an investor in that company. Fortinet. This is a stock that I own. Really terrific discount, PE ratio, keeping it there. It's growing. It's growing about the same rate as Palo Alto. It might even be growing a little bit better. 37% discount. And just showing examples of, hey, what could we buy out there? Zscaler is priced a little too high. I made money on Zscaler. I bought it at the right time, sold it at the right time. And this was a good stock. If we look at the chart, you could see where you could have made money. CrowdStrike, I think, is too expensive. It has been kind of the favorite stock. It is the one that a lot of investors own. So there's a variety of stocks within cybersecurity. And hopefully you found the analysis interesting, Ben 10. And that's my analysis on Palo Alto. And then the technical charting handled by Daryl. Thanks for asking. Looks like Ben 10 is going to be praying for Fubo. Well, let's see if that works. If it does work, if I could provide a stock for you to pray for, I'd appreciate that. But tell me if it works for Fubo first, please. All right, so S&P, NVIDIA, up 1.9%. Look at this, nice and green. IBM's picking up a bid. That's greening up out there. All right, that's what we want to see. We want to see like a rising market. Let's rally into 2026. I'm good with that. I'm totally good with that. We're green across the board. Crypto land is green. All right. I'm okay if we go up from now. We don't have to go crazy. Just keep going higher. All right. The mystery. Let's clear up the mystery. Why did Daryl choose OKE? I want to know. Magical
Yeah,
Self wants to know.
it's just basically a trend reversal. So some of my other first choices were already selected. So I came down to this one. Basically, we've had good support on this one at about $60 per share. We did have a really good uptrend
Mm-hmm.
during 2024. And then it's started on a decline again, but it recently broke out. In fact, let me just adjust these while we're here. It's been a while since we've looked at this one. So I'm connected to that peak. I'll just drag it down to there. And then that one, we're connected to that peak right there. So I've been, this particular chart list is just tailored to this show. When Victor and I doing this show together. So I have a chart in my portfolio that I have a little shorter time frame, and that's where I watch it on a day-to-day basis because I do own this one. But it has broken out above that trend line, tried to break out of this trend line, and it's looking to do that again. So the reason for my pick is just a trend reversal.
All right. Well, switching over to my screen here, if this thing does what it did in 24, you're going to be in good shape. This thing really just went up in 2024, went from roughly $71 a share, and it peaked at 117. It did settle down before the end of the year, but still, that was a very good rise. So good luck to you, sir. All right. So we've got Oki in the books. Oust. I don't even know what oust is. Let's take a look. Ouster provides LiDAR sensors for automotive, industrial, robotics, smart infrastructure industries in the Americas. Sounds interesting. Oof. Oh, look at that. Well, this thing was priced at $162 a share way back when. Market sold it off. Just it's been a rough ride for anybody who was an early investor in this stock. But look at that, 69%. Small cap. I don't know. This one's got potential. This one might go to $50 a share before 2026 is over. Of course, it's super high risk because we've seen what the market's willing to do to this stock. Whew, it's a small cap. Good luck to whoever picked OUST. That looks like a long shot, but that's where we're going to have some fun because I bet you there'll be a couple stocks that come up on this list that are going to be surprises. It's going to be like, whoa, now that we know that this is going on in the market, yeah, this stock makes a lot of sense. Like, let's say crypto really just took off. Well, Peter's going to be sitting pretty. But if it doesn't, then maybe some other trend might work. Like if we have healthcare take off, and especially these small caps, I see a couple of healthcare picks, right? Clover, Catalyst. I think Delcath Systems is med device. We've got Oscar. So we got healthcare in there, and we got financials all over the place. We got SoFi, Dave. So we got financials in there. So we'll see. We'll see how it goes. It'll be interesting to watch. And what's ALM? Almonte Industries mining. That's a good one to pick. Wow. Okay. Whoa. 2.5 billion. Look at that. Oh, wow. 936%. Whew. If we could do half of that, that looks great. All right. So Mike wants to take a look at the charts on Nice and Joby. Can you take a look at Nice and Joby, please?
Oh, you want me to? I thought you were.
Oh,
Nice.
they wanted to see the
Okay.
charts.
All right, I was daydreaming. Sorry about that.
Well, you could tell us about the daydream later.
So it kind of fits my cup here that I got. Can you see that?
Uh,
Sorry, I wasn't listening. I was thinking about trading.
yeah, that's where you should. That's what you should be thinking about.
That's right. That's one of my gifts. Okay, so we have a downward sloping 250-day. 20-day has stopped declining and is starting to climb back up. Let's I don't think we've looked at this one before. If I did, I didn't save the chart. See if we have a over a longer term. Yeah, maybe somewhere in here around 147 would be good support. Let me look at it again. Yeah, I think right around there is where I'd put my longer term auto resistance line. Maybe I should just go ahead and do that, and we'll save this one. So I think about right here. So we had a couple points where it come up and tested it, and it finally broke out above it, came down and tested it again, tested it here, broke down below, then broke above it, and is trading below it at the moment. So on a longer term basis, that's where it seems to travel around. So we'll save this one. Then we'll look at adding some other information to the chart that we should keep a eye on. So, all right, let me add a few other lines here and just see. So if we connect to this peak back here, looks like in March of 2024, it's come up and tested that a couple of times, and it's been trading quite a bit below that trend line for a while. And now let's just go to one chart or 1 year. I presume this was earnings, or if I were guessing, that's related to earnings. They had a 12% drop that particular day, but they did recover fairly quickly. And the 5-day recovered and has been trading mostly higher for the time being, and the 21-day has rolled over. It's going to face resistance at the 50-day. That looks to be about 118, could be 116 or so by the time we get there. So I'd be watching out for a break above that. And then you'll have some supports here at these previous levels or resistance levels that you'll have to watch. And then you have the downtrend line, which aligns pretty much with the 200-day as well. Any specific questions on that one, Mike? If not, what was the other one he wanted to look at?
The other one was
Joby.
yeah, Joby. That's like
Okay,
the
let's
that the
air taxi.
airplane company, air
Yeah,
taxi. Yeah.
let me see if we have one on them already. Oh yeah, we do. Okay, so we did look at this one before. I'm gonna pull this downtrend line out a bit just so we can see where that's hitting. So they traded above that downtrend line early in December, came down and dropped below it on the 17th. That would have been a Wednesday, I think. And then they broke out above that and are trading above that downtrend line at the moment. 21-day is declining, the 50-day is declining, 5-day has turned around and moved back up. The 200 day is also increasing, and they haven't tested that since back in May. So that looks like it would be a really good support line. But the fact that it's above this downtrend line is good news. We have a higher level downtrend connected to this point. And then we have resistance up here at about 2140, 2095, somewhere right in there, where we'll face some resistance. The
All right.
RSI is below the 50 line, and the PPO is in bearish territory at the moment.
All right. Thank you, Daryl. All right, we're going to switch over to KLAR. And KLAR, I'm glad this one was brought up because things have changed quite a bit. The business is looking good. So this is a new IPO, and this is what new IPOs tend to do. They might be terrific businesses. They just tend to sell off. This is beginning to look like an opportunity, a good one. So these guys are in the buy now, pay later space. It's a new space. I think it's terrific. Lower interest rates. The way these guys make money, because I looked into them. I looked into this one, a couple others. PayPal does have a component to their business that is in buy now, pay later. Is Visa charges, in general, Visa and whoever issues a credit card, they're charging 3% in general. And some big retailers and Amazon, I'm sure, negotiates and gets it down to, I don't know, 2% or 1.5% or something. But in general, it's 3%. And Visa makes money because they charge a toll. Like, hey, we're going to get this slice, period. Okay. What KLAR is doing is goes to a retailer and it says, hey, let's say we're talking to Best Buy. Hey, somebody can buy a product in your store or on your website, and it's $1,000 product. They're going to pay us over 4 payments over the next 45 days or something. But Best Buy is like, we're going to get the net 97% of the sale price, transaction price, immediately or in a day or two or however many days it takes. So the retailer's happy. They're getting sales revenue, moving on to the next customer. And KLAR is happy because they're going to make 3% every 45 days, and really less than that because they're getting an initial payment like in a week and a half, second payment in like 2-3 weeks, fourth payment, and so forth. So they're basically carrying that debt for a total term of 45 days, but average half of that, 22.5. And in that, let's just call it 30 days for easy math, they're earning 3%. Well, that's freaking good, because if you annualize that, 3% times 12 is 36. So just simple math is like, yeah, I see the potential here. If they become big, they can become a mini Visa, which is they're charging this rate, and they will have some losses. They will have some cost of doing business. Done. Now, are these guys successful in operating this idea? So far, the market's like, oh, Klarna, never heard of them, not ready to buy into them. Got it. They do have a profit now. Last time I looked at them, I didn't have profits to work with, but now I do. And it's a smaller cap, 11.25 billion. Analysts think this is highly discounted. Let's take a look at their growth. Their growth looks good for the historic, and they did provide a lot of numbers here. They just IPO'd, which is interesting that that many numbers are available. Growing at 17.8%. They're up to a $3.2 billion revenue company. Again, that's the 3% I was talking about. That's where they're making the revenue. So it's very transaction based. It's not like a bank that does net interest margin. So this is the trailing 12 months view. Gross margins 49%, 51%. Okay. Profit margin, they're getting there. I think they're forecasting a profit, so that's good. Trailing 12 months show a loss. Free cash flow, very good free cash flow. Okay. All right. Looking at the forecast here, we got 14 analysts covering it. They all think this thing should be higher. And the growth looks really good. So the growth going forward looks good. And they should turn a profit in 2026, which is now the number I'm going to use, because I'm looking forward 12 months. And we are at December 26th. I'm not going to use this year. I'm going to use this year. This is 12 months into the future, so 62 cents per share. The PE looks a little high at 48, but it drops to 25 very quickly. And the profit's supposed to expand quite quickly. So when I update my valuation of Klarna, it's a very discounted stock. The IPOs, I'm careful not to buy too soon. But this is looking really good. Valuation looks terrific. And I don't know if the technical analysis is going to be all that easy for you, Daryl, because it's a new issuance, but let me turn it over to you.
Yeah. So we don't even have a 200-day on here yet, but the 50-day is still declining. The 21-day is still declining. It's been pretty flat since the end of November, pretty much trading sideways. So that's definitely better than this downtrend that we saw from the IPO to pretty much the third week in November. So it's been recovering since that point in traveling sideways. So this may be where it finds some good support moving forward. The RSI got above 50 during during this period right here. So from October, the first week or so of October, maybe the second week, first and second week. And the money flow has been leaving this stock, and it's been in distribution. But it does look like it's leveling out. So like to see it get trading above that 50-day again, which is currently sitting at around 33.
And when do these guys announce earnings? Let's see here. Because I'm observing that the retail information I'm seeing, the holiday season's going well. this holiday season goes well. This is the United States of America. People buy on credit. And these guys are probably growing quite well. So that last announced on November 18th. So if I carry that forward 3 months, these guys are going to be February 18th or so. Earnings announcement. Yeah, this one here is looking really good. I think KLAR looks terrific. So, Brucey, I don't know what you plan to do, but I'm going to write myself a little note that I need to consider. I need to consider buying into KLAR because those numbers look really good to me. So I'm going to put a little bit better rating on that. I don't like buying too close to the IPO, but I think we're good. Might be a good stock to consider in January or February before the earnings. And I'm going to watch it. Thanks for bringing it up. All right, so this looks a little more red, but what's going on, market? That's not too bad. Give it some time. Looks like Tony's on the stream. Good to see you, Tony. All right, so got some guesses here on what you were daydreaming about. You're daydreaming about half that 900% rate of appreciation.
Mm-hmm.
That's not a bad daydream. All right. Thanks, Ben 10. Thanks for bringing up Palo Alto. Ben 10. All right. So Mike looked at KLAR. Yeah, I think, if you look at KLAR and you show up to the party a little late, I think this party at KLAR is going to last for a while. Maybe you show up a little fashionably late to the party and it starts to rally. The valuation's so good that this thing could start to work. The only thing I would expect is if this thing kind of catches fire, these things just scream up and it could go up fast. So I think I'm going to keep my spidey senses a little heightened on KLAR. And I might buy a little early. I might regret it, but I would hate to see this thing kind of fly up and then I'm like having a tough time getting in. One of my small regrets, I don't have a lot of regrets. This is a small one, is I did my homework on Visa, crossed my T's, dotted my I's. It looked really good. I'm like, I should buy this stock. And I didn't buy the stock. And it's working. And it's like, but it wasn't like highly discounted, but it's Visa. It's like super solid. Now the valuation's like not that fabulous. I'm like, well, it's not killing it. It's doing okay. And the 5-year looks good, not record setting. So this is Visa. It's a different animal. This is very well known. We know what we're buying here. It's super solid. KLAR it might take a year for it to work. It might start working next month. It might start working next week. Got to watch it and see when it starts to make its move. And I'll kick it around. I'm going to kick that one around. See if it's worth taking the chance on it. All right, so we got through the request. Good to see everybody online. And since we don't have any other requests, let's get into a couple stocks that we've talked about in the past. And I was curious to see how UPS and FedEx are doing, and maybe look at the charts a little bit. So UPS has had kind of a rough couple years. Amazon's really changed their business because Amazon's taken away some volumes away from UPS. So UPS for a while was benefiting from Amazon, especially during COVID. Look at that. Whew. During COVID, when we were all at home, not being able to go to restaurants, we had little extra money in the bank because we weren't driving our cars, we weren't spending money, and it really flourished. But since then, it's really been tanking. Now, this one here began to look good. It pays a nice dividend, 6.5%. And I wanted to compare it to FedEx. These are good comparable companies. You can see that FedEx has kind of made it to the last 12 months far better. It started its recovery and it's going higher. Over the 5 year, a little bit of the same. I started buying into UPS thinking, I'm picking up some good value, and so far so good. It's doing well. I think the 1 month. So they're both up. FedEx is doing really well. So do you own any of these? Either of these, excuse me.
I own UPS.
Okay. Yeah, and when I look at UPS, it's now UPS is kind of in my mind, a lower risk stock. It's not like Klarna or, you know, a really high potential stock that also comes with high risk. But it comes with a 26% discount. And I think the future is far better for UPS. They've adjusted to, the fact that Amazon has taken away their volumes, but there's still a lot of shipping that needs to be had, and UPS is out there doing it. So that's a pretty good discount. It's lower risk stock, and so far so good. Get paid a nice dividend. It's been appreciating nicely, so I'm glad I picked it up. Let me take a look at the latest analyst opinions on UPS. See if opinions are changing. UPS is up a tiny bit today. Its market cap 85 billion. There's that high dividend. 18 analysts, they think there's a small discount. And when we look forward, this coming year, 2026, flat, but then we've got the growth. So that looks good. Looking at the quarterly, it's going to be in the middle of the year that they start growing. So UPS, good stock for like an investor that does not want to take big risk, wants to buy something that they know has been around for a long time, proven business model, and that's UPS. Lower beta. Any thoughts on UPS, FedEx that you'd like to share? And I'll give you the screen, sir.
Okay, so I bought into this one before I really implemented the process that I use now. So I'm underwater on this one, and it's been in a pretty much a long-term downtrend. Whoa. I don't know what happened to that trend line. I'll have to fix that later. But I started buying some more here. It had leveled out and started breaking above this trend line and this trend line. On the RSI, let's see, about a week before their earnings, we saw it come up and test the 60, got up to about 57 or so, came down and held the 40, And then on this run higher, it actually broke above this previous high. So that was a good sign going into the earnings. So I was picking up some shares in here, lowered my overall cost per share. And like Victor said, they do pay a really good dividend. It's 6.52%. And it's got a good safety score on Simply Safe dividends. Has broke above the 200, came up and tested it again and broke above it. And we have a 50-day that is crossing above the 200. That's called a golden cross. And it is maintaining the RSI above 60 at the moment. We also had a bullish crossover in the PPO at the same time that we got this RSI breaking above the previous peak after holding 40. So those were two confirming indicators that something good was getting ready to happen with this one. So that's where we are. I have a blended value on them of about $107, $108. That's right at this downtrend line. So they don't have much more room to run before they'll start hitting their intrinsic value.
Thanks, Daryl. So
You
we have
want to
a
look
question.
at FTX or
Yeah.
FDX?
Yes.
Yeah, so they're looking really strong right now. They're trading above their 21 day. They came down in intraday, got below the 21 day, but quickly recovered. They have a 50 day that's increasing, a 200 day that's increasing, and they had their bullish crossover at the a golden cross on the 27th of October. RSI looks really strong. It is overbought at the moment, and the PPO is in bullish territory, and money flow is still really strong. This is a 1-year chart. We have accumulation. Look at all this accumulation over the last 5 days. Very, very high. So Monday, which was lightened trading for the week, but they actually surpassed their 50-day trading volume, average trading volume. The next day, they traded right at it. And then Tuesday, let's see, this would have been today. So this was Wednesday on the half day, and you can see that it traded below its volume. But most of the time during these lightened weeks, you'll see all the trading for every single day below their 50-day average. But there are some stocks that people are still buying. Citigroup is one. They're staying at their 50-day average volume, and it looks like Federal Express is trying to do the same thing. So anyway, this one looks really strong right now.
Thanks, Daryl. So we have a new request at CCJ, and I was right in the middle of doing the valuation. So let me try to get that to a good place, and then I'll switch over.
Okay, you want me to look at the chart first?
No, I'm almost there.
Okay,
we're good. I'll fix it on the fly. All right, so CCJ is a company that provides uranium for the generation of electricity. Okay. So nuclear power is making a big comeback. So these guys are these guys provide uranium fuel. I want to see if are these guys mining it. Okay, so they have the partnerships to source it. Okay. These guys are Canadian. Okay, so these guys, their stock price has really gone up this year, 81%. And there's a lot of interest in nuclear. So it makes sense. The story on nuclear is a positive one, that it could be the source of electricity for data centers and the growth in energy consumption. It has gone up a lot. So market cap 40.5 billion. The company has a high forward PE. That stock price is looking like it's really run up a lot. So the growth expected from this business, it's good, single digit. It's just not incredible, right? It's not like, whoa, they're growing by 50%. They're growing by 8.6% in 26, and then close to 10% in 27. Their profitability is growing, but that PE ratio is going to stay elevated for a while. So when we look at how desirable is their business, they've been growing nicely. So gross margins of 36%. It costs money to get this uranium fuel and get it to market. And they do make money. They're profitable. Probably the price of uranium's gone up with all this attention on it. And then the free cash flow margin is good. So could I kick it over to you and then finish with the valuation?
Sure.
All right.
I was putting a trend channel on this one. Those are pretty powerful when you look at them over several years. So this goes back to 2021. And I think you saw what I was doing. I put one trend line here at the bottom. It was in 2021, came down and tested it in 2022. Broke down below it here, tested it here, broke down below it there. Then I just made a copy and drug it up to the top. We can see that it touched there, and it's been trading right at the upper end of this channel since. So that gives you a little bit of caution. This thing could continue to run up, but based on 4 or 5 years worth of data, when it tends to get up to the top of this channel, it does find its way back to the bottom of it at some point. With the interest in the uranium powering these nuclear reactors, this could stay up here for quite a while, but it would be something I was be cautious on. If I owned it here or bought it here, I would have a really tight stop on it, because we have plenty of examples where it did pull down to the bottom of this channel. The 200 days rising, the 50-day is still increasing, but the rate of change on that is slowing down. The 21-day declined a little bit last week. It's on its way back up and crossing back over the 50-day at the moment. Let me go down to just 1 year. The RSI is above the 50 line, so it is bullish at this point, and the PPO is also in bullish territory. So that's my thoughts on this particular one.
All right. Thank you. So this one here, Google, it's kind of a stock that it doesn't recognize it. It's giving me the information on a company in France. That's weird. So I'm gonna have to kind of hard code some of these numbers because I'm getting it wrong. The reason I was taking so long is the shares outstanding. I was using the lookup. It wasn't working right, but the shares outstanding are not correct. Because it's looking at that company in France. So the shares outstanding 435.41. Okay, that's fine. And the stock price is actually $93.19. So this one here, the cash flows show that this business is really worth about, and my cash and debt is wrong. Let me update that. So we have cash of 559 million. And we have debt of 723 million. So it's priced expensive when you look at the value of their cash flows, discounted at 8%. And they're growing at about 10%. That looks good. This looks good. And now let's update the earnings per share valuation. And for 2026, it's going to be $2.08. Now, this is in a popular space where there's a lot of investment. And from there, they're supposed to grow by 20%. So it's expensive. Shouldn't be a big surprise. It's really rallied higher. They don't have booming revenues. It's not like, whoa, the revenues are really, going way higher. Nope. They're just going up by like 10%, which is good, but not fantastic. So it's expensive, and it's not a big surprise. Looking at where the stock has traded for the 1 year, it's up 77%. But over the 1 month, you've seen this volatility. If we have any kind of pause or apprehension about data centers being built, I mean, you're hearing more stories that data centers are becoming a problem for some communities where, these data centers consume a lot of power. They consume a lot of fresh water, and those things are not unlimited. And some of these communities are being impacted by it. So I think there's going to be a little bit of pushback from communities saying, hey, we get that could be an economic plus to have data centers in our community, in our city, state, county. But we got to have water. People have to have water to survive. And if we have a pause in the data center and it causes kind of like that whole big picture to kind of lose some of the momentum, I think this stock's going to sell off, because the nuclear thing, right, is any current nuclear power generating plants are going to do well because there's plenty of buyers for the power. But bringing on new capacity for nuclear, that's going to take a long time. There's a new documentary on, I think it's Netflix, on 3 Mile Island, and they go through what happened there. I forgot if it was, I think it was in the late 70s or 80s. And there was a meltdown. It was a bad situation. And it's just bad from every angle you look at it. And now Microsoft wants to restart 3 Mile Island. And it was a big money losing situation for the operator. That was the conclusion there. And Microsoft's going to try to, restart it. It's going to take them a while, and we'll see if it gets there. So that's the analysis on Cameco. Really interesting stock. And boy, if we saw this one coming, it would have been a really fun one to look at a year ago. But here we are. Now the stock's pretty expensive. We'll see how it goes going forward. Thanks for asking, Ricardo. Hope you found the analysis interesting. And I'll put that in the saved repository. Although I had to hard code a couple numbers here because for some reason the Google lookup was finding a different company, which is weird. Put myself a little note here. This is kind of a manual lookup. So whenever I look at this valuation, I got to update that number as well as the share count. So I'll put this guy, and I'm going to update this list of the repository evaluations probably this weekend before the year is done, which is the next 5 days. So you guys should be getting that at some point soon. Let me just kind of put one piece of data in here, and then we'll be back to looking at the market, looking at other stocks. All right. Looks good. We are good to go. And we'll take a look at what's going on with the stock market here. Now we're in the green. Good to see. Slightly in the green. So I bet trading is super light. Do you think next week we're going to see heavier trading, like heavier volumes?
I don't really suspect so. I don't think it's going to return until after, see, the second, third, fourth, fifth is the first trading day of the new year. I think it'll pick back up then, but I don't expect a big push this week.
Mm-hmm. Well, volumes are pretty light. Just a couple of stocks are making it happen. All right, so we looked at UPS and FedEx. Let me check the chat. Looks like Paul, good to see you. So there's kind of a light Santa Claus rally. To this point, I got to say, well, it hasn't been a super rally, but year isn't over yet. We still have more than 3 days of trading. Partial day today, and then three more days. So we'll see. But I agree. The increases. Huh?
We are better than the average right now. So since
really?
Since 1950 to the end of the year, the market S&P has returned 1.4 on average since 1950. And we are currently sitting at 1.7, so we're higher than the average at the moment.
Okay.
And I'm measuring that from the 15th to the 31st. So let me go back to my other screen that I was showing.
I like the picture.
Yeah, so this is from the 15th onward to the 31st. From 1950 to 2024, the average return is 1.4, and we're sitting at about 1.7 right now.
All right. Well, it's already been a good year for me, and we're just kind of playing out the remaining days. So it would be nice for it to go higher, but no big deal if it doesn't. So thanks, Shadow Guy. But do you know, I have a lookup on Google. Is there a lookup for Google Finance as well? I didn't know that. Do you know, Daryl, if you can do the Google lookups?
I've never used it, Yahoo Finance, for that.
I'm gonna look into that. All right. I made myself a note. I will look it up later. DraftKings is green. Well, let's take a peek. DraftKings stock has been under pressure this year. It's up 50.58% for the year. Not a good year. This stock hasn't really worked. There's some stocks that had, investors had expectations, like the betting stocks, the cannabis stocks, and they kind of disappointed on expectations overall. And these guys are under the threat of the prediction markets taking, market share away from them. We'll see how it plays out. All right. So, okay. So let's take a look at any other industrial stocks that you think might be worth taking a look at.
I don't have any on my radar at the moment.
All right. Let's take a look here. So here's industrials. What's, I guess, harder about industrials is they're all over the place. We got aerospace and defense.
You want to share?
Yeah. Thanks for letting me know. I was talking to myself. So what's hard about the industrial sector is that it has industries all over the place. Aerospace and defense, specialty industrial machinery, engineering, construction. It goes every direction you can think of. Now, let's take a look at some of these 1-year changes, 5-year changes. So aerospace and defense has certainly been working. Okay. I don't know if we're going to find a ton of discounted stocks there that are set to really outperform. Engineering construction, they did well, but let's see here. So 1-year change doing well. See, that's another like measure of how's the economy doing. Well, engineering construction, these guys provide good jobs and their businesses are doing well. So another reason why I think the economy is doing okay. So electrical equipment, yep, 67%. Data center. Marine shipping. Okay. The one space that I would like to look at is this came up. I was in the gym and shipbuilding. The US wants to do more shipbuilding onshore. And this is the one shipbuilder that I'm familiar with, Huntington Ingalls. Military ships. So over the 1 year, wow, geez. Isn't that a beautiful chart?
Mm-hmm. Wow.
Well, I'm looking at it 1 year too late because it's really worked. Aerospace and defense have worked. And these guys, they're military ships. So they get these. I think one of the things they do is they do these big carriers. And the US has to refresh their fleet. And I don't know what the US allows these guys to sell to other governments, but these guys are right in the thick of shipbuilding. So this stock's really worked. That's a part of the industrial space. So that one there is probably that the horse has left the barn on that one. Let's see if anything else looks interesting to take a look at. Waste management. Let's see. So what do you think of have you ever held waste management?
No, but I've looked at it quite a bit. It's definitely one of those essentials, recession or not.
Yeah. Look at that. Yeah. It's done really well. Up 90% over the 1 year, 8.65. Pays a small dividend. And They're just a steady grower. It's kind of like a Costco, steady grower. Profits are expanding, P ratio. So this is a super safe stock because we need, waste, garbage picked up. These guys do it. I don't know if I have a valuation on waste management, but it might be interesting to take a look at. All right, so no, I don't have it. So, oh, here it is. Here it is. Now, did it in November. Let's see if I can update it here on the fly with us here. So let's take a tour around the financials and so forth, and then I'll update that spreadsheet. So pretty good size market cap. Very familiar with this company. It's not overly hyped. And we looked at their growth. Quarterly. Wow, look at this. Why have profits gone up so much? Oh, excuse me. Why has revenue accelerated so quickly? Interesting. So the growth in the current year looks really good. Nice. All right. So what I'll do is I'll walk you through the valuation spreadsheet model, and we'll update it together just to make sure everything looks right. And then I'll kick it over to Daryl. So it's a really safe industry. So I'm going to go with the discount rate 7.5. That's appropriate. All right. So they provided guidance. Let me see if they're overachieving on that guidance. So, yeah, the trailing 12 months cash flow is right on the button. So that's good. So 7% growth. I'm good with that. I'm good with this. And they were growing much better than that. So I'm going to go with 15 here. All right. So balance sheet items. Cash looks correct. And the debt looks correct. So here, we're not getting there by cash flow. Earnings per share numbers. So for 26, earnings per share should be 8.59. That's what it is. P ratio at 24. Growth rate, I can go to 10% on that. So it's not a discounted stock. I can take this to 7% because these guys are pretty recession resistant, really solid. Their balance sheet, they do have a debt to EBITDA. Let's see how much that is. 3.1, so that looks okay. I'm going to change it back to 7.5. So not a fantastic opportunity based on valuation, but a really good business. Waste management, an industrial stock. Let me kick it over to Daryl to see the charts on waste management.
It's hard to find companies like this that have a trend channel this long that is so consistent. So you can see over since 2009 that it's traded within this channel and it's trading slightly below the midpoint right now. It has come down and tested the bottom of that trend channel. Looks like 4 times over that time period. It goes up and tests the top end about the same amount of times and tends to trade right around the middle of that trend channel. So although the fundamentals say it's overpriced, if you're going to step into this one because of the consistency of the company and safety, this is looking like a pretty reasonable place to be entering. In my opinion, it is below the middle of that trend channel and
Man,
got a strong trend channel.
what a chart.
Yep,
It's like something you can set your watch to. Although
exactly.
I haven't set a watch in a while.
Me either.
Thanks, Daryl. All right. So Shadow Guy said Chinese steel is booming, and I agree with that. I think we just talked about shipbuilding, and in that video that I was watching, it was produced by either CNBC or Bloomberg. It showed that the market share leader for shipbuilding is China. No big surprise. And then number 2 is Korea. Japan used to be a big shipbuilder, but now they're in third place. The US is like literally doesn't even show up on the chart. It's just so small of the share that we have. And I got to put this comment up here just really quick. I thought the mafia did waste management. Oof. Not touching that one, Brucey. I don't want to get whacked after this stream. All right, so Chinese steel is booming. So I go over to BHP Group Limited because these guys are a big miner, principally in Australia. And they distribute, being in Australia, they have the ability to distribute it into China. And they can take their coal. They also do copper, uranium, gold, zinc, so forth. They were doing oil for a while, but not anymore. So these guys have been a stock that I've kind of liked off and on for a while. Let's look at their forecast. Analysts, 2 of them, don't think very highly of BHP. These guys have a fiscal year that ends June 30th. This is the fiscal year we're in. Looks like the commodity price, these guys are really dependent or affected by commodity prices, are not going to help them this year that much. But they are going to grow their profits, bringing down their PE ratio. Okay. This one here, I mean, the stock price has done well. For the 1 year, it's up 25%. They pay a 3.5% dividend. These guys announced twice per year instead of 4 times because they're down in Australia. And their earnings were announced on August 18th. So the next time they announce earnings will be, I guess, in February, March timeframe. And they'll be announcing for the first half of the fiscal year. When I look at a valuation of BHP, it's a steel miner of steel predominantly, the ore that we use for steel. And here it is. So they're in a more risky industry, so I give them a higher PE. I'm using an average cash flow because, the commodity prices will fluctuate and it's hard to know where's iron ore going to be next year. I don't know, but if I use an average, I'm probably going to be better off. Now, the earnings per share, is that accurate to the latest and greatest? And it's interesting that some analysts are saying 2 of them, but they're saying, oh, no, the stock's bad. And then the stock's trading higher. We do have 22 analysts weighing in on their forecast. And their forecast looks good. The earnings per share is up slightly. So it's 18% discount, giving them a PE ratio of 12. Right now, they're operating above that PE ratio because I think the commodity itself isn't doing all that great. So this one here is like, I agree with Shadow Guy saying, "Hey, the China economy is doing well. They're producing cars and ships and all kinds of stuff. They're going to need steel. That's not a bad idea." And this is a compare that I completed for a video I produced for members. It'll be public or yeah, public on January 17th. And I compared all these companies. BHP ranks here. The number one is SCCO Copper. Oh man, beautiful stock. It's done so great. It's been doing really, really well. So I'm going to give it some thought. Maybe BHP might be a good buy, but I'm going to give it some thought. Any thoughts on BHP?
On this one, I think I would just be careful of where you buy this one. So right now it's trading quite a bit above the 200, but you can see that it traded below the 200 from June of last year until July of this year. Here it traded above it. Here for several months it was below it. Several months it was below it, and quite a while it's been above it. So this one tends to test the 200-day fairly frequently. You don't have to wait very long. So the fact that it's this far extended, it'd be on my watch list, but not on my buy list at the moment.
All right. That seems like a good plan. And while I'm talking about BHP, let me look at Southern Copper. What's it doing today? It's up again. This thing's just been on a tear. Yeah, material stocks are doing well. You know, there's some spaces outside of tech that are doing really well. All right, so let's call it a day, or I should say call it a stream, because the day's just starting on the West Coast. Market's flat. Not a real exciting day, but that's what we've got. So as we wrap things up, what's happening with your channel?
Nothing since the last time we spoke. I put out a couple videos earlier in the week. So those are available if anyone's interested, but nothing new really to speak of.
All right. We're going to try to stream next week on Monday, Wednesday, Friday. Yeah, all those days are open. Thursday, the market's going to be closed next week. That's New Year's Day. But join us for the streams if you can in the morning. And on my channel, I'm going to be producing some videos today and over the weekend. I'm going to try to focus in on, what's going to be important for me to keep track of in 2026 to see where the market's going. I think early in the stream, I think I agree with Daryl that there will be volatility. I mean, what year doesn't have volatility? But we could be caught up in a pretty good correction, and it might be early in the year. So trying to see which factors are probably going to tell me, hey, we're heading into some type of correction is important, just so that I know what's going on, and then try to take advantage of it. Try to take advantage of, correcting prices that maybe, sell off a stock that's a terrific company and I could buy it at a really good price. So I think that's going to be the case. So I'm going to create a video around what factors I'm focused in on and I'm going to keep track of. And I've got a couple of other industries that I wanted to take a look at that I think are interesting to look at. And they're going to be industries that I don't touch all that often, but I'm just trying to cover spaces that maybe will yield a good idea or two and are out of the technology space, which I cover quite a bit. So that's it, guys. You guys have a terrific day. And thanks for joining us today. And good luck with your trades today.
Have a great weekend.